Welcome back, everybody, to another market day. I am your designated Inquirer. My name is Axel, and today is 8/12/2020. It is a Wednesday, and a lot of stuff happened today, and a lot of stuff didn't happen today, but there was significant movement in the market, and so that's what we're going to be talking about today. Now, all right, let's go over a few things. One, we're going to be taking a look at the NQ first, because the NQ and the ES, or rather the NASDAQ and the S&P 500, are completely different animals at the moment. Two, I am not a financial advisor. I am not licensed in any state to give financial advice. What I present to you is information and opinions about what I think may or may not happen, but is only an opinion. You should not take it as advice. Please seek out your own financial advice through your own financial advisor that happens to be licensed in the state in which you live. That being said, I have studied economics, I have studied engineering, and I have a pretty good idea of what can happen on a statistical basis on, certain phenomenon, etc., whatnot, in our daily lives. Applying this knowledge to movements in data, in this case the stock market, we can try and assess it and maybe try and figure out possibility for a direction, but it does not mean it can always happen. Case in point, essentially, even though yesterday we did reach a very good level as to from the peak here to here, the probability was that we would have a continuing downward, that we would be able to probably gap down, come up, and then continue forward lower, but that did not happen. We only have a probabilistic edge of something happening. Now, there wasn't anything necessarily also to trigger this movement upward. Now, if we look at a daily chart, what we can see here, as far as day-to-day is concerned, this was a somewhat large movement up, but with a relatively lower amount of volume, considering that the previous 3 days have moved lower but on higher volume. It gives a better indication as to how meaningful this move upward was. Moving down into the 4-hour time frame, even though this candle was very, very strong, the following subsequent candles were not as strong. Okay, this one right here can sometimes denote a top. Okay, sometimes can denote a top, meaning that there's a lot of space above it where it traveled and it was not able to keep that height. Okay, same thing can happen with the opposite, where we basically have a very leggy to, like on the low side, candle, where it went down a whole lot, but it was able to recover within the same 4-hour period. This meant that, statistically speaking, because everybody interprets the candles more or less the same way and will more or less come out to the same conclusion, this gives a statistically high chance that humans will probably make the same, more or less same decision and move in sync in the same direction. Whether or not that's so. If you're looking at a chart in a technical manner, you're kind of employing a whole lot of things without necessarily knowing that you're employing them, including behavioral analysis, statistical probability, and a bunch of other stuff that you may or may not be actually knowing that you're using, but you're actually using it, because that's what a technical chart or technical indicators can probably tell you, because it's not always going to be the case that you have a 100% certainty that anything is going to happen. So, probabilistically, this is the only manner in which I can speak, a very long naked wick on either side probably can tell you that there's going to be a movement in the opposite direction. Not always, because sometimes you probably have a large wick in both directions. Here, it decided to violate this direction of the more or less the wick. And so generally, if you saw this, maybe you have a better chance of it moving upward, but it didn't. It moved down. Here, it kind of gave you the right indication 2 times, 3 times even, because the room on the bottom was a lot higher than the room on the top. The wick on the top was a lot smaller than the wick on the bottom. So we decided to move upward from this point on, which is what happened generally. Now, where are we at right now? Here we had a little bit of a wick on the bottom. There was some wick, but it was still a pretty strong movement downward. That's all bulls needed, apparently, from a technical standpoint, to use an excuse to move to the upside. But what happened now in return? Maybe they're overextended, maybe they're not, but there is a wick on the top side. So this could mean, may mean, but not with any certainty, that we may be having a move lower tomorrow. We don't know. We don't know. We can only make a best guess, and still ask people who are licensed and have your best fiduciary interest at, well, they're supposed to have your fiduciary interest at heart, and that are licensed and are legally bound to give you advice that would best suit you financially. But I'm not licensed as such. I don't have to follow those rules, but just because I don't have to doesn't mean I won't. I'm going to give it's not even advice. I'm going to only put out my opinion, best informed by the information that I see, that I'm capable of seeing. I think that's the best way that I can put that, without necessarily saying that I'm making any sort of recommendation whatsoever. I am not making a recommendation whatsoever. That being said, we can continue. All right. So what sort of information did come out today? Well, that was CPI, the Consumer Price Index. What does that mean? Well, the CPI is basically an amalgamation by whom? Let's take a look. CPI. We're gonna look at CPI right here. It is put together by the U.S. Bureau of Labor Statistics. Okay, so for items in July, for all items in July, prices rose by 0.6%. So there was some inflation. And most of this, so there was a decrease in what seems like energy by 11% in July, which means that people were not traveling per se. So there was an increase in basically food and basically all other categories. So if there was a decrease in traveling, which meant possibly that people were not going to work, were probably not going to on vacation. If less things were being made, then partially there are less things, less supply, but still an equal and or growing demand, then prices may be able to go up, even though may not have the ability to buy things. They may still want things, and they may still misuse their money and buy things. So we did see a small increase in the prices overall, apart from what was energy. So what does this tell us? Partially that the market can charge higher prices for their goods, that generally a business can possibly make more of a margin on their goods than they otherwise could, given that people are willing to pay for higher in prices. What does this also mean? This also means that because there are higher prices, and given how sensitive we may or may not become to prices later on, given that we may or may not be gaining more money individually in the future, what we may see is a higher resistance to actually buying things, given that prices have gone higher. Just because prices are higher does not mean that we partook in actually buying more things. It just means that there is a higher probability that maybe more companies made a higher profit. So in terms of earnings per share, this is a good thing that there was an increase in possible earnings per share. This may or may not have, been responsible for the move up today, maybe, but as the information was released, it didn't seem like that was more or less a gigantic factor. Something else that people were talking about that could have been a factor or not was that Joe Biden ended up picking Kamala Harris instead of Elizabeth Warren for vice president. Now, this doesn't take out the possibility that Elizabeth Warren can still be, you know, Secretary of the Treasury. It may not be that she could still be tapped for lead role in the Consumer Protection Agency. Like, she's still a very powerful senator. Her still being a senator still makes her a very influential person, given that that there is a statistically higher chance of a blue wave, that if Democrats do take the Senate, what may happen is that she may be put in charge as part of lead or partially lead the oversight committee in terms of financial dealings and whatnot. So when there is somebody that gets summoned to Congress to explain what happened, she may be what's it called? She may be majority leader of the Financial Oversight Committee. That could be something that can happen if Democrats take the Senate, which is probably not going to be good for banks in particular, and maybe not for stocks in particular, but overall for the stability of the economy, it would be a good thing, which in the long run is good for banks and is good for the economy. If you want proof of this, well, let's take a look at the presidency of Barack Obama. If you're still confused, since the downturn, what we experienced, let's see, from 2008, let's go to 20 years here. All right, we're going to look at basically from 2008, okay? The recession had already started, and by basically, this is the part that trips me out still. This is the part that trips me out. Okay, this was the downturn, okay? This took from 2007, okay? Which was from October of 2007 all the way to February of 2008. It took a whole year for this thing to crash. Like, a whole year of consistent downturn. And somehow across 2 months, people think we're okay. We're okay. Everything is okay, guys. Everything is okay, guys. Nothing to see here. No. Because even though the pain in terms of price discovery of the asset that was coming down took a long time to happen throughout the housing, all right. Anyway, even though the price discovery and the bottoming out of the housing sector took a long time for it to happen, the price discovery for a lot of goods, and including the housing market, has not effectively already happened yet. There's a lot of commercial real estate that's going under. There's still a lot of housing that still has yet to decline because there's still a lot of jobs that are being lost and have stayed lost. There's a lot of rental units that are not being occupied. There's still a lot of credit card debt that hasn't been paid, a lot of student debt that hasn't been paid. There's a lot of people that are still not paying their mortgages. Like, there's a lot of pain still in the system that has not yet been fully digested yet by the market in terms of seeing the financial implications of all of these deficits in terms of earning and spending, etc., or whatnot. Like, we still haven't seen, we've only seen the tip of the iceberg, and we're assuming that it's clear water. That's effectively what happened right here. This downturn is only seeing the tip of the iceberg, and this is why I maintain that we still have a lot of pain to suffer in terms of the stock market, in terms of the real economy, in terms of whether or not Congress can get their act together and put forward actual benefits and stimulus to the greater economy, meaning the people who need it the most, people who don't have as much money. Until they can get help, we're still gonna be all suffering and have yet to suffer, including the rich. But they're gonna have a lot, for a lot of them, for a good majority of them, a lot of them are not gonna actually feel any pain. I'm talking about the type of pain that most of us can probably go through in a depression, okay, and or a very large recession. Now, from coming back to this again, there was a lot of new regulation. There was a lot of imposed changes over time. There was a lot of discussion, like investments that were taken by the government into structurally, improving the overall system, which is our economy and our society and our economy. I'm losing my train of thought. Anyway, there was a lot of investment done. Given, if I add here, studies, let's study, monthly study, okay? If we look here, from this downturn, okay, there was so much positive momentum here. It has been very difficult, even though we saw intermediate bumps along the road. We saw very strong, positive, continuous movement. Okay, this was all from investments and changes that were made to the stock market, to the economy, to society over a period of time, basically led to a more consistent and steady growth, sustainable growth, a improvement on the foundation on which we live and function and trade and love. Like, that's what can happen in a democratically elected government, like, that takes the time to invest in its people and companies, not just its companies. Okay, from 2016 on, yes, there was a lot of deregulation. Okay, there was a ton of deregulation, but this does not mean that it has been a nicer place for everybody. Okay, there's been a lot of pain, there's been a lot of suffering that has taken place within the United States, because even throughout Barack Obama's presidency, there was still some pain, there was still some tumultuous times to be had that maybe wasn't necessarily within the United States, and sometimes within the United States as well. But here, there has been a lot more volatility, even though there has been, to a certain extent, an acceleration of growth, what could be seen as growth. There hasn't necessarily been a steady rate of growth. Okay, it has not necessarily been sustainable, or could be characterized as sustainable, because there was a lot of regulations that were being slashed, and sometimes without any care of the world as to why they were put in the first place. There was a lot of antagonizing of allies, antagonizing of adversaries, and or people, who we still, even though they're adversaries, we still trade with. What I feel like what has happened during this presidency has effectively been an eroding of the foundation on which where we trade, of where we love, etc., and all these other things. Like, the foundation has been eroded. Like, the economy has still been functioning, but it's not. It doesn't necessarily mean. What am I trying to say here? As far as the market is concerned, from what we've seen of the market, and only the market, that has seen growth. A lot of it, if we're taking a look at the entire history from 2008, to a certain extent has been a continuation of basically the growth that was from the Barack Obama presidency. Now, since essentially the election of Donald Trump, there has been to a certain extent an acceleration, but also a categorically more turbulent time. Because here, during this period right here, which can be seen more easily, there was hardly any movement away from a steady and sure climb upward. Okay, there were some dips, but it was steady. The time under Donald Trump has been a lot more turbulent. Okay, usually you don't see a cone, of an expanding like space as to movement. Okay, it's not necessarily a good thing. Sure, we've had an accelerated upturn, but that doesn't necessarily mean that it has been a good thing, because we have suffered falls. A lot of money has been shifted, a lot of money has traded hands, but it hasn't always been to the benefit of everybody. There has been a lot of destruction that has happened under this current economy since 2016. It's pretty obvious. It's pretty obvious. Yeah. Anyway, continuing on for what happened recently. Let's see here. Even though we're after hours from here, let's take a look at what's happening after hours. We ended the day at 13. Okay. Since after hours, the market has dipped a little bit. Now let's take a look at what's happening over the market. When I say the market, currently I'm talking about the Nasdaq. Let's take a look at the S&P. Here, I gotta remove all this stuff. It's fine. Removing it. Alright. Here, we're taking a look at a different picture, because in the Nasdaq we have been declining and then finally shot up today. From the S&P 500 we have been rising, and until yesterday we declined, and then today we came back up again. We came back up above yesterday's high, which was the intraday high, meaning in between days. Intraday means in between. Interday would mean within the day. Now, since the close at 13, we have also dropped. Okay, and at a certain point it dropped even further than what the general level has been since the close. I don't know how overseas is going to take all this information as to what happened today. They may run it up, they may run it down. We don't know yet. We don't know how and or what's going to happen in the rest of the world. We don't know what's going to happen in Japan with the Nikkei and the Hang Seng in China and the FTSE in England. I don't know what the stock market is called in Australia, but I don't know it. Or in Russia. We're not going to know till tomorrow morning, till we see how the market opens. Anyway, I believe those are all the things that I have to say for today. If you guys have any questions, comments, or anything like that, please feel free to comment down below. It does help the channel in any way, shape, or form. Interaction with the channel means a probabilistic increase in my video being searched, seen, etc. So go ahead and like the video if you guys see benefit to this and these things being discussed in the way that I discuss them. Share them with your friends, with your family, people that you think might benefit from seeing this information. And until next time, you guys take care. You guys stay safe. Love you guys. And yeah, see you later. Bye.